Welcome back everyone, I'm John Furrier, host of theCUBE. We are here in our NYSE studio on Wall Street. It's theCUBE's East Coast location with the NYSE Wired team. Of course, we got Silicon Valley and Palo Alto connecting technology and Wall Street together, investors, tech builders, all the actions happening on theCUBE. Melissa DiDonato's here, Chair and CEO of Kyriba. Very relevant solution for liquidity, but in a company way. Melissa, great to have you on theCUBE, good to see you. Thanks
great
for coming on.
Great to be back on theCUBE.
This CUBE alumni now like the new location, not too shabby here. It's our own set, first podcasting format on the show floor, second largest behind CNBC.
Not bad, you guys have done very well. Proud to be here.
Connecting tech and money, natural fit for our audience because obviously AI is impacting a lot of business. You guys are in that space. CFOs, we just had a CFO summit in Palo Alto, we're going to have one here in New York. The top conversation was, I need to use technology beyond the predictive analytical dashboards that I have into more generative to make things go faster, faster insights, trusted data. These are all the hot button conversations. What's your reaction to that and what do you see?
Yeah, I mean, so we speak to CFOs every day. That's our bread and butter, our core business. We sell to CFOs, finance teams, treasurers, and we hear them constantly asking us questions about what can AI do for me? We did a bit of research with our CFOs. We found that 50% of them are very interested in AI and AI tools, but cautious. 80% of them want to know more, but 50% of them are like, oh, well, what does all of this mean? So we're finding that CFOs want to not just do their jobs better and faster, but they really want to do it in a predictable way. They want to be able to take historical insights and trends, utilizing their own data, because typically CFOs don't really trust a lot of areas, do they? Yeah. Notably so. So what they want to do is build an AI base with trusted information, trusted data. So really taking generative AI, utilizing that as an engine with their own information, in conjunction with the volatility of the markets. I mean, we are faced with a hugely volatile economic backbone right now, in any market, in anywhere around the world, right? It's not just New York, it's not just the US, by the way, it's global markets are being impacted by the decisions here in the US. So CFOs are beginning to question more, like, what does this volatility mean? What can AI do for me to actually give better insights so I can make better decisions? Yeah. And it's played because the CFOs are the ones that are the most inquisitive, but the least trusting.
They're conservative.
100%. They're not going to make decisions based on AI, but they want the insights to ask the right questions with AI.
I love coming to Wall Street because in tech, things can be fast and loose. Innovation can sometimes, you let chaos reign, you reign in the chaos, you got some stability. CFOs, I thought, would be more traditional, like, hey, conservative, I don't want to, but they're pretty leaning into AI. And here on Wall Street, they have the phrase running money, right? And so companies now look a lot more like more agility with their money.
That's right.
And so you mentioned some of these volatility factors. CFOs got to be aware, this isn't just, hey, I have my trusted relationship with Silicon Valley Bank, I put my money in there, they're going to take care of it, we saw what happened there, or hey, I want a sweep account of it. I mean, all kinds of making stuff up, but the options.
Relevant.
Now, this is now the role. It's almost like they got to be much more nimble to manage how their cash is doing, but then if they're not putting their cash to work, I mean, is this something that you guys talk to them about?
Absolutely. In fact, I was talking to one CFO earlier today, and we were talking about fast decision making versus being nimble to be able to make decisions, right? And the thing is that in today's market with this kind of volatility, the one to get the fastest answer is not the winner. It's the one to be the most nimble with the right amount of data. And we look at the inflation and interest rates. I mean, inflation is going to be what, 2.7%? Interest rates are going to stay steady for at least a couple of goes more, we think, we don't know, but 11 out of 19 officials are saying they're less tolerant now of the change, we don't know. I mean, and GDP is going to actually grow slower versus growing faster. Interest rates are volatile, the US dollar is down by 4%. I mean, all of these things create a very volatile and insecure landscape for CFOs, particularly CFOs of corporations that are worth, more than $1 billion in revenue, because they begin to say, okay, well, I'm holding, 500 bank accounts and 8 different currencies, and I don't know where my liquidity is or how it can perform in which market. So this is really at the heart of not just making great decisions and creative, predictive insights and information around liquidity and how it performs, but where it performs. What's it going to have an impact on my supply chain finance? working capital's gone up, right, to the tune of 5 times since the beginning of 2020. So if working capital finance has gone up by 5 times to 24 billion at the end of 2024, what's going to happen with CFO decision making in 25? Well, likely, based on the volatility, we'll see an increased rate of DPO, right, or when CFOs are trying to pull DPOs down, payments outstanding. So working capital, supply chain, interest rates, inflation, this all becomes the mainstream everyday conversation of CFOs that all impact their liquidity performance, where their cash is, what the risk could be. And that's where trusted AI comes into play.
You know, it's interesting, you make me think about a lot of things, like cost of capital too is another factor I'd throw out there, because now, if you look at some of the scenes with AI, all kinds of new decisions crop up. I want to outsource to a cloud, or I want to do it on-prem. If anyone's doing anything with data, it's usually on premises. Do I buy more gear? Am I buying that $500,000 NVIDIA boxes? Or 2 million, I mean. Or
do I buy it now with the semiconductor tariffs? We don't know. It seems like everyone's making fast decisions.
You guys are putting up some pretty big numbers, 29%, I'm looking at my notes here, 29% of the Fortune 500, 3 billion annual bank transactions, 15 trillion transactions per month.
US dollars, 15 trillion US dollars in payments, that's right.
Per month, that is phenomenal. So you got a big footprint. What are some of the stories you're hearing that are driving more the awareness around what I need to do as a CFO in my company? What can you share, conversations you've had, stories from customers or people that weren't customers that should have been customers and coming back? Share some stories. Stories drive movements, that's how I say.
Yeah, you know what, you're right. I'll give you a couple of examples. One is around currency exchange rates. I mean, I had a recent conversation with the CFO about currency exchange, and he is so insecure, and now he's plagued with this issue, which has now been a very common question. Do you stockpile? Do you buy more now as a business that have high liquidity, like have high cash balances? Do I stockpile, and do I take it in which currency? And this is a very relevant conversation, and everyone thought coming into 25 that we'd see more CFOs buying, spending to avoid things like tariff, interest rates, inflation, et cetera. And in fact, the reverse has happened. In fact, what I'm hearing more and more from the CFOs is that, you know what, I'm going to wait and see, Now, the reverse has happened with consumers. Like I read a report this morning that said consumers, on the other hand, are stockpiling. They're the ones going out and buying Porsches, because they're worried about the 25% tax tariff, coming onto automotive that was announced earlier this week. So, the story about CFOs, and we all predicted they would stockpile, and they didn't. And cash balances have gone up, and they're worried about where their cash balances sit in relation to exchange rates. The other thing the other story I hear a lot about is managing multiple bank balances in a hub. Every bank claims, HSBCs and JP Morgans and Morgans, they all claim to be able to offer insights for liquidity outside of their own bank. But in fact, they haven't really gotten that right yet either. And that's where we're seeing a lot of pull from our customers. Can you help begin to triangulate, create dashboards that are universal bank balances in various currencies, but I also want you to tell me and predict what's going to happen with those bank balances in 6 months. And I want you to model for me what happens if interest rates go down in England, but go up in France, or go down in the US, but go up in somewhere else in the EU. So the ability to triangulate multiple bank accounts.
They're running money.
They're running money.
That's awesome. Talk about the liquidity. Before we came on camera, we were talking about liquidity. Certainly the crypto scene here, obviously they have an exchange here in New York, so there's a lot of liquidity here. Options were going nuts today. What does that mean for a company, liquidity, specifically? Is there like categories of like little liquidity needs, all big problems? It's the same kind of problem set? Scope the challenge and the opportunity around managing liquidity.
Well, I mean, the thing about liquidity is that every business has the same problem. It's just how big it is, right? Everyone's going to hold some level of working capital. Everybody, whether you're Melissa's Flower Shop or whether you're HSBC, you have to manage your liquidity appropriately and where your liquidity sits and the risk associated with that cash. If you don't start deploying your cash in the right ways from a working capital perspective, then you're losing money. So for every business, whether large or small, now, at Kyriba, we've got 3,000 customers in 170 countries. Most of our customers are the enterprise, big strategic customers, but we've got a third of our base that's what we call mid-market, which is between 500 million in revenue and 2 billion. And that space, by the way, has more than one bank account, then liquidity is a concern. So, we have to look at, CEOs like myself, whether private or public, have to look at liquidity as an opportunity. You can either, in an opportunistic way, make the right decisions against and with your liquidity, or make bad ones. And the problem is that liquidity and do you remember the days when cash was free?
Yeah.
I love those days. It's not free anymore.
I miss that way.
I also miss that way.
Dave and I should have been on that cash is free. No one gave us the memo.
I lost the memo of when it was free and then when it became really, really critical, but now we're in a phase of it being really critical. And that working capital is going to drive really the biggest decisions that the biggest companies make for the next 5 years, for sure. And that's the problem we're trying to solve.
On your customer base, do you see certain sectors, retail, enterprise, is there a category that you guys see more attention around liquidity, or is it just similar problem across verticals? I mean, retail, I can imagine.
Retail's huge. Insurance is big. Financial services is big. Automotive right now is incredibly troubled. With regards to stock and inventory and costs, right, and the supply chain itself. So we have to think of anything with a big supply chain is going to be extremely complex when it comes to liquidity, because obviously supply chain finances has very, a number of different jumps and positions that need to be taken care of. So that's definitely complex.
I know you got a hard stop. I really appreciate you coming in. Love to have you back on. I mean, great content around how CFOs are thinking, but also business transformations happening. What are some of your goals for the year? What are you looking at? What's the landscape look like for you, for your goals this year? What are you optimizing for?
Well, look, I think at Kyriba, we were in an incredibly fortunate position. We're fast growing, we're more than 20%, strong EBITDA, and we have strong cash positions. Of course we do, because we're liquidity management
you use
solution.
Your own tools.
We're
great liquidity.
Exactly, we have great liquidity, so that's good news. We're deploying our liquidity in the right ways. But for us to grow, I think, we continue to dominate in the US market, we continue to dominate in the enterprise. For us, really great success is when we continue to evangelize our customers and give CEOs the ability to make the best business decisions.
Any public offering?
I've done an IPO a couple of years ago. I would say in the most troubled IPO time. Maybe, let's see.
The IPO
see how the next year goes.
this spring, maybe in the fall, this will open up again. Great to have you on.
I think early 2026, my prediction, is that you'll see that's when the IPO market will begin to turn.
Well, you guys certainly are doing great. Congratulations on putting up the big numbers. For the last minute, we got put a plug in for the company. What are you guys looking to do? Hiring?
We're hiring in every market. We've just done a minority deal with General Atlantic here in New York. Bill Ford, the CEO, I met with him this morning. Super excited about our partnership. You'll see a lot ahead of us, and we have M&A acquisitions in particular in our space. The regional players, as well as extending into treasury and into adjacencies in the office of the CFO.
It's probably a good market for acquire acquisitions for
Absolutely.
You guys, given your dominance.
That's right.
Well, thanks for coming on theCUBE.
Thanks for having me.
We're here in the New York Stock Exchange, of course, talking about liquidity and corporations, CFOs. Check out our CFO summit we had in Palo Alto this year. One is coming up here in New York. Brian Bauman with the NYSE Wire community, of course, will be working that with us. I'm John Furrier here at theCUBE, your host. Thanks for watching.